They were they were looking at receipts and payments. So this is a famous topic because it's usually examined, but it's not very complicated. It's direct and straightforward. Yeah.
All
So
right.
yeah, we're looking at receipts and payments. So there's just a few things that we need to understand. Otherwise, the ideas that we've picked up from the preparation of a sole trader profit or loss statement, financial position, they remain the same, right? All the ideas that we've picked up. But the issue here that we have to remember is the fact that these receipts and payments, that for those businesses that are uh, subscription based, right? They are not really profit making. So their major orientation is not profit making, but rather to provide a service to their members. So large quantities of their proceeds, income comes from these subscriptions that they have. Of course, they might have other aspects that generate income, but primarily they make money from subscriptions. So I'll give you an example of a golf club. So a golf club, their primary source of income is subscription from their members. But of course, they can have maybe a restaurant or a bar where they're selling different types of refreshment products, right? That's a typical
Mm.
example of the type of business where you prepare receipts and payment. And then the other idea for exam purposes, the clubs that we're trying to look at now in this topic, they don't prepare complete financial statements, right? They don't have a full set of books that we actually look at, right? So most of the accounts that we're going to come across, they are incomplete, and therefore we need to create subsidiary ledgers so that we can arrive at things like the sales, the purchases, and the likes, right? That's the
Mm.
those are the key points. And then number two, what we call capital in the statement of profit or loss for a sole trader, partnership, and the likes. Here we call it accumulated fund. So when we are looking at accumulated fund, which is this one here, then it simply means that's the capital that we are trying to look at. And then there's also what we call receipts. All right. So receipts, these are just the incomes that come in, and then payments, these are the payments that this business makes. And then the other point is when we prepare the bar trading account, or rather the, the receipts and payments account, what we call profit and loss in the statement of profit or loss, here we call it surplus or deficit over payments, right? So those are the key differences that we have. But otherwise, the ideas that we've picked up from the previous topics with respect to preparation of financial statements, they stay the same. Then the other point that we need to understand is there are steps that we need to follow in order for us to prepare a receipts and payments account. So fundamentally, number one, the thing that we need to look at, the thing that we need to look at is we need to prepare what's called the statement of affairs. So the statement of affairs is what's going to give us what we call the accumulated funds or capital, right? So from this context, it's the accumulated fund. So that's the first step. The first step, we need to find that accumulated fund. So how do we calculate the accumulated fund? So we know the accounting equation is assets is equal to capital plus or liabilities, right? So if we're trying to find
Mm-hmm.
capital, we just get the assets, we deduct the liabilities, and then the residue is going to be capital. That's the
Capital.
accumulated fund, yes. So we get the non-current assets that we have, right, at the beginning of the year, right? If you have got buildings, plants, machinery, and the likes, you include them as part of the non-current assets. And then if you've got any current assets, you've got inventory, receivables, prepayments, cash at bank, right? And cash in hand, you include them. Then the other item that I think I just forgot to include here, there's subscriptions that can be prepaid as well as subscription that can be owing. But from the perspective of subscription, whenever a subscription is owing, right, that is a current asset to the business because it's a receivable to some sort, right? A member of the club has used the service for the club and then they owe that subscription that they haven't paid. Therefore, it's a current asset. But if they've prepaid that prepayment, that subscription rather, then it simply means the
The
club is,
current liability.
yes, it's owing a service that they need to deliver to that member. So therefore, when we're finding the accumulated fund, we identify the non-current assets, the current assets, and then we deduct the non-current liabilities and then the current liabilities. And we're going to have what's called the accumulated fund. And then step number 2, for the most part, in the exam, you're going to be coming across this situation, right? This is a club, it has got other incomes, right? For example, a bar, right? So that profit, that loss, that income from the bar has to be treated separately from the receipts and payments, right? So we need to first find the profit that's associated with the bar, right? And then we need to get that profit and include it as part of the receipts and payments account. So in an instance where we've got a bar that's part of the service that is provided to the members of the club, right? You calculate the profit or loss the way we know how to calculate, right? So it's got the revenue. Here, the revenue sometimes you are not expressly given the revenue. You're just given the amount that was paid, right? The amount that was paid, it means that's a cash payment. But remember, there are some credit sales that might be included. And therefore, we're going to be given receivables at the beginning of the period and then receivables at the end of the period. And then when you remember the control accounts, right, you can be able to find the sales value. So that sales value that you use by taking into consideration the opening receivables and the closing receivables, that's the sales that we need to have here. But remember, we're only dealing with the items that relates to the bar, right? Nothing else. So only those items that relate to the bar, these are the ones that we incorporate as part of the statement of profit or loss for the bar. And then after we find the revenue, we've got the opening inventory, we've got the purchases, we've got the closing inventory. So of course, the cost of sales for this topic is not extremely complicated. That maybe they might be carriage inwards, maybe they might be purchases returns, but those are extremely rare because they focus more on this purchases where you are given opening payables, closing payables, and then you're given the amount that was paid. Those are just those are the purchases that were paid for, right? It doesn't mean those are the total purchases, but you've got the opening receivables, closing, rather, you've got the opening payables and closing payables. Therefore, you can be able to compute the total amount, right, that was purchased. And then once you do that, you bring the amount here. I just realized I wasn't opening the small account. So for the revenues, it's something like this. This is the sales, right? So you've got the balance brought forward, you've got the balance carried forward, you've got the cash that's received, the cash that's received through the bank, and then the sales that we're looking for are here, right? So you just perform your computations and then you find this. For the purchases, it's also the same, right? You remember the control account, you've got the balance brought forward, the balance carried forward for the payables, and then you've got what we're looking for is this. And then if there's cash here, maybe bank. But what we're looking for are these purchases, right? So fundamentally, what you need to remember is this. When you find the purchase value, we use the payables, not the inventory value, but the payables. Sometimes you'll be given inventory, you're given the amount that was paid, right? You don't use the inventory to calculate the amount that was purchased, but rather you use payables. Right? So the rent, if there's any rent, if there's any electricity, if there's any salaries and wages, things like depreciation, insurance. But again, the point is this depreciation is not for the whole club, but the one that is specifically for the bar, right? And then this electricity also, or rent, or any other expense, there might be accrues. So you have to remember the accrues. Also, there might be things like, there was rent that was owing, right? There's also the opening balance for the rent. Then there's also the closing balance for the rent, and then you need to find the actual rent amount, right? So those are just the few things that you need to have knowledge of. I don't know if you've got a question so far.
No, I'm following.
Yeah. Then
But this one, is it amongst the videos that you uploaded?
I think okay, I'm not really sure, but I think so.
Okay.
Yeah. Then so after you've got the bar trading account, right? You find the profit or the
Yeah.
loss. And then now you need to prepare these receipts and payments, right? So you're going to have things like subscriptions. So these subscriptions have got workings, right? So you've got subscriptions, right? Opening, and then you've got the closing balance for the subscription, and then you've got the cash or bank that was received, right? The subscriptions that were received, right? The subscription that were received.
Hello, sorry, I broke.
Yeah, can you get me now? Hello?